Guys, Starbucks is getting super close to a buy for us on our watch list. It's the world's most legal drug dealer I've ever seen. People are addicted to the stuff. Mo, how many times a day does your wife, fiance go to Starbucks?
At least once.
Yeah, at least once a day. Lisa loves
ridiculous.
it. Guys, it's a $105 billion market cap. How many stores these guys got? And they only have $140 billion enterprise value. That difference here is the debt. I'm sure a lot of it's the leases on their stores.
Operating more than 38,000 stores in 80 countries as of the end of 2023 fiscal year.
Jeez, oh Pete. Guys, now net income is $4.1 billion last year versus 3.7 free cash flow, and 5-year net income is 3.2 versus 2.8. We don't really like a difference, but this difference is so small, and I'm sure it has to do with depreciation. When they build out a store, you spend $5 million billion. I don't know what the number is. You build it, you can't expense that $5 million. You got to depreciate over 5 or 10 years. That's probably why this is so much higher. So that's a good thing. 27% gross margin. I'm actually surprised, Mo, that their profit margin's that high.
Me too. Being in that industry.
Now, I will say it's expensive, and the unions are starting to come into play.
That's the one thing that worries me about that company.
Yeah. Mm-hmm. It's going to cost a lot of money to go. But people are addicted to Starbucks.
True.
Look at this return on invested capital.
Oh my God.
Absurd. This means, guys, this is a moat business right here.
Yeah,
that's what that means. This is the word moat is so overused. So freaking overused. But tell me, if I told you, name me a coffee company.
Starbucks.
What percent? If we're on Family Feud, we asked 100 people to name a coffee company.
The majority.
98 are going to say Starbucks. One's going to say Folgers, and one's going to say...
I don't think anybody's going to say Folgers.
I'm going to go shout out to Cleveland. Dewey's in Cleveland. How about that? Dewey's Coffee in Cleveland. What was that?
I'm going to say Dunkin' Donuts.
Dunkin' Donuts. You're probably right.
Yeah.
Okay, so it's not 98 for Starbucks. Because there are some people out there who refuse to say that Dunkin' Donuts is not as good. I don't know. I don't drink coffee.
I like Dunkin'.
It's pretty good. I like their donuts. I'll tell you that. All right, let's go check out their income statement over the last 10 years.
Okay.
$16.5 billion. Growing every single year, except for COVID, of course. And they're at $36 billion in revenue right now. $36 billion in revenue. I'm not going to lie, guys. If you told me 10 years ago they're going to more than double their revenue, I would have said, Starbucks? That's 7 or 8% growth a year in revenue. What? Come on.
I would have said how. It's basically, I mean, it really is kind of a luxury item.
It absolutely is. It absolutely is.
It's like a status symbol to walk around with that cup.
And the good news is their profit has doubled as well.
Yeah.
So you're probably going to see revenue and profit growing at the same rate. What are they doing with their shares? Buying them back.
Yeah.
So guys, Starbucks is rewarding their investors by buying their shares back. They had 1.5 billion shares 10 years ago, now 1.14. The question is that a good use of their capital? Well, they're selling for 25 times earnings. You only want a company buying shares back that are relatively cheap. But 25 could be okay because of Starbucks being an amazing moat. I don't know. So let's go check out what analysts are saying about the company's growth potential. Earnings per share, they estimate at $4.16 for the fiscal year ending in September of 24, going to $7.77, double-digit growth over the next 3 or 4 years. Dang. What about revenue? Double-digit growth again, almost. Look at this, high single digits. I mean,
so here's something interesting, a little anecdote. Yeah. When we were in Manzanillo, I went to Starbucks there. It was packed, and I think, like I said, it's a luxury item. That's a cheap way for people to get luxury into their life. It's a good starting point. You know what I'm saying? Paul, it was packed. I took a video of it. I should send it to you.
And I think Manzanillo, even though it's it's an expensive city, I mean, it's still Mexico and people don't make a ton of money.
That's it, but it's a way for them. You don't go out and buy a Louis Vuitton handbag. You go and get it.
So it's a low price point luxury item.
Yeah.
And by the way, I love their egg white bites.
They're good.
So good.
They're good.
Now, guys, before we get in the stock analyzer tool, which will ask us for our assumptions and how much we want to pay for the company, we're going to first go and check out the 10K, which is right here on the main part of our site. We hit annual reports. It takes us right to the SEC page for Starbucks. I'm going to the 10K, which was written November 17th, 2023. Mo, how many stores do they have? How many are they opening? What same store sales growth? Tell us those numbers.
1 second.
I'll find the comparable sales store.
Okay.
The comparable store sales increased 9%. 9%, Mo. Compared to 21%, 12% for 2022. But again, this is COVID numbers. This is still coming off of more people going out. But 9% fiscal for 2023 for North America and US. That's pretty incredible. Now, how many stores do they actually have?
Okay, so in North America, 17,810 stores. Internationally, 20,228. And of course, that number, 38,000.
Can I tell you something? I'm surprised by that.
Not, you think it was higher?
I would have thought North America would have been like 35,000 stores, or no, 25,000 stores, and international would have been like 10,000 stores.
Yeah, actually, you're right.
So the question
You
is,
would think there would be more in the States.
how many are in Africa? How many are in China? How many are in India? The three largest population centers in the world, how many are there?
So in Japan,
So China has 6,000.
China has 7,000 about, almost 2,000 in Japan.
Oh my God, all others are 67.
Yeah.
So you're talking about India and Africa, which are in Middle
So
East.
just think about the expansion. That
The
can happen
expansion there is huge. And I think they're also focusing on more company-owned stores versus licensed stores.
there. Yeah.
And I'll show you that right here, Mo. The revenue here breakdown on company-owned stores versus licensed stores. The interesting part is licensed stores had the biggest jump in revenue from October of 2022 to October of 2023. That's the interesting part. Interesting. Very, very interesting. 10% growth, 11% growth for company-owned, 23% growth for licensed stores. I wonder why that is.
I don't know.
That'd be an interesting thing to find
It
out.
would be. If you're going to go buy this, check that out.
All right.
All right.
So let's see. What is this company worth to us? When was the last time I did Starbucks in our stock analyzer tool?
I know I did mine in January.
Now, guys, I'm going to pull up our stock analyzer tool. Just to let you know, we have so many tools here. If you're interested in learning about our software, watch the next video where we explain our software and how it can make you a better and calmer investor. So I did it back in August, and I did some margin of safety here, Mo. We're going to go through my assumptions and Mo's assumptions, and then we're going to show you our numbers. So I did revenue growth of 6, 9, and 12. I actually don't like that anymore. I think I'm going to do 5, 7.5, and 10.
Okay. I did 5, 8, and 11.
Okay. Profit margin, I did 10, 11, and 12. I'm glad I'm put 10 in there, even though I don't think they're going to hit 10. But I'm glad I put that in there as a conservative number. Same with my free cash flow.
I did 10.5, 11.5, and 12.5 for profit margin. Free cash flow margin, 10, 11.5, and 13.
Oh, interesting. Yeah. But look at this, Mo. In the last 5 years, their free cash flow has been lower than their profit margin. But 10 years, it's been a little bit higher.
Right.
All right, now, the current PE is 25.5. The current price of free cash flow is 28.6. What's a reasonable PE to pay 10 years from now? I put 16, 19, and 22 for both of these.
So I actually did 20, 22, and 24.
You're probably right.
Because this is the coffee company.
I'm going to do 17.5, 20, and 22.5.
Okay.
Because I do think this company deserves a premium. And for my desired return, I'm going to go with 9, 11, and 13. Because I want a little bit of margin of safety. I want a little bit better return on these middle assumptions. Even though I went lower on these, I still feel like I'm okay with 11% return.
I did 10, 12, 14%.
Okay. I hit the analyze button. Mo, give us your numbers first.
So 64 on the low end, 106 on the high, 82 in the middle.
All right. I got 61 on the low end, 95 in the high, 76 in the middle. It's on my watch list at 80. I'll probably start selling puts at 75. Guys, go check out our video on how this software can make you a better and calmer investor.